Assalamualaikum warahmatullahi wabarakatuh. Hello everyone, my name is Ranisa and today I want to talking about financial statement, the income statement, the balance sheet and the cash flow statement. I'm going to try and explain all the basic in under 1 minute, which is going to be a challenge. So let's get started. What are financial statements? Financial statements are reports that summarize the activities and financial performance of a business. They're prepared at the end of each accounting period and they're designed to give investors and lenders a feel for a business financial health. The three main financial statements are the balance sheet, the income statement, and the cash flow statement. Well, start with the balance sheet. What is balance sheet? The balance sheet is a financial statement that gives us a snapshot of a business assets, liabilities, and equity at a single point in time. The balance sheet is also called the statement of financial position and it's look like this. In the header, we have the business name followed by the name of the financial statement, and directly below that we have the point in that we're looking at. On the left hand side of the balance sheet, we have a list of everything the business owns its assets, and on the right we have everything business owns its liabilities and equity. The example delicious owes liability to third parties, like its supplier, its employees, and the tax office. Well, if the business were suddenly sell off all its assets and pay off all of its debts in the theory, this is how much money the owner will get. At the bottom of the balance sheet, Delicious has total assets, liability, equity is in a balance, which is fantastic news, but because a balance sheet always has to balance. Why? Because it says so in the accounting equation. Assets shall always equal liability plus equity, or the stuff the business owns is equal to the stuff to the stuff that a business owns. Next, what is an income statement? An income statement is a financial statement that summarizes a business revenues and expenses over a period of time. The income statement looks like this. As you can see in the header, the income statement covers a period of time. The year ended December 31, and in the body of the report, we have a summary of revenue earned and expenses incurred. Profitability is key to the income statement, which is why it's also called the statement of profit and loss. But it tells us how much profit the business earned over a period of time. But be careful here because profit doesn't necessarily translate to cash flow, which is why business also need a cash flow statement. What is a cash flow statement? A cash flow statement is a financial statement that shows a business cash inflows and outflows over a period of time. They need to be tracked separately in the cash flow statement. A cash flow statement looks like this. In the header, we have the period of time that it relates to. Just like we had in the income statement. And in the body, we have two main sections. At the bottom, we have the opening and closing cash balances for the financial year. We get this number from the balance sheet. Let's do a quick recap. The balance sheet gives us a snapshot of a business assets, liabilities, and equity at a single point in time. It shows us what a business owes and what is owed. It also tells us how much the business is worth to its owner. And then we have the income statement, which show us a business revenues and expenses over a period of time. When we take the difference, we can see if it made a profit or a loss. The cash flow statement reveals a business cash inflows and outflows over a period of time. These are reconciled back to the movement in cash in the balance sheet. Okay, that's enough. Thank you from both of us, and we'll see you.